Boom. Ladies and gentlemen, it's me, the Anderson on Wall Street, here from the balcony of the New York Stock Exchange. What a wild and crazy day. This is the first up day that we've had in multiple days. We have been in the midst of a wild, massive, global, I don't know what you'd call it, confrontation. Think about it. We've gone from like wars that last years to wars that last months to now we've got wars that last weeks, and we've got this massive geopolitical, we've got the commodity involvement in this one. This has been an absolute insane March. 2026, like out of the gate, is like roaring like the most insane lion of all times. We've seen everything. Once again, I almost feel like a broken record, because for 2024 and 2025, I kept saying to you that this is the year, this is the month, this is the week that everything possible is being thrown at this market that could happen, and yet the market is real resilient and it still is able to forge forward with all these things going on. Well, you know what? March is the same way, and in fact the last week or 2 weeks is exactly the same way. Once again, we are being thrown into an absolute it's just like a molten vat of wild craziness, economically, commodity-wise, geopolitically. Economically, it's absolutely wild. We're here at 1 o'clock on March 16th or something like that. So, right, we're just past the Ides of March. We're here at St. Patrick's Day, and it's our first up day that we've seen in a while. And it's amazing that once the chatter goes down about the war, right, and we're out of that risk-on, risk-off trade around oil, that the money immediately starts flowing back into the market. And that's the kind of a story that I really like. And there's nobody better to address that situation, to put down all the chatter than my man Tim Anderson. Welcome. How are you, sir?
I'm great.
Good. Thank you. So could you please, episode 9,857 of Tim Anderson, the Einstein of Wall Street, what the heck's going on?
So look, the market had a much more favorable tone on Friday than it had for all week long last week.
Okay, even though it was still down.
Although we gave up a number of those gains as the day wore on.
Correct.
Nothing really terrible happened over the weekend.
Correct.
There's clearly not a resolution yet.
Right.
But there weren't oil tankers getting hit by drones or other missiles from Iran.
We weren't dropping mines into the Straits of Hormuz.
A little bit of a chatter that maybe a couple of boats went through the Strait of Hormuz. I'm sure Iran is, whatever's left of the Iranian defense forces, whatever you want to call them, I'm sure they're monitoring what ships are trying to go through. And look, the big oil tanker operators are just not going to send their cargo through there until they get escorts from the U.S. Navy.
Correct.
And or other consortium of forces.
Correct.
And also some an insurance replacement to replace the insurance that Lloyd's canceled a couple of weeks ago.
Correct.
But oil has not spiked. It's down 5%, $3 to $4 from where it was late last week. It's still quite elevated, and people are just, I think the buying today is indicative of the fact that the market is a forward-looking thing, and it's anticipating that 2 weeks from now, 3 weeks from now, 4 weeks from now, this is going to be very close to a conclusion.
Correct.
And oil will be back into the, initially the mid to high 80s, and then probably the low 80s to high 70s.
Right.
And we'll be back, even if you look at the futures contracts for oil right now, that's what that's telling you. So people are taking advantage of a lot of the selling that we've seen over the last 2 weeks and looking at value situations.
Amazing explanation of what has been happening. I think we need to really get inside the nooks and crannies, because if we go back, it's 2 weeks.
Yep.
2 weeks ago on a Saturday, the United States and Israel, in a coordinated fashion, went in and attacked Iran. And obviously, that whole area is a hotbed of oil producers, of political unrest, of combative and contentious trade relationships and geopolitical relationships. I mean, it could not be a hotter bed of wild and crazy place. And then you throw oil on top of that. You throw a lot of anger and resentment around whatever maybe happened in Venezuela earlier. You throw a lot of anger and resentment around China and Russia, and then the nuclear situation in Iran, and then the relationships with Israel and the United States, and who's partnering with who, and who's playing in whose playground, and who's taking their ball and leaving. I mean, it couldn't be a more complicated situation.
And I think one of the biggest surprises that's come out of all this is that Iran has fired probably more munitions on countries, the Emirates and other countries that you would think would be a little bit more sympathetic toward Iran than they have even on Israel, which of course is much further away. These other countries are just the other side of the Persian Gulf. And they don't like it. It's not, they're getting absolutely no sympathy from the Emirates, from the Saudis, from the Kuwaitis, from any of the other Arab slash Muslim countries that are on the other side of the Persian Gulf.
You're absolutely right.
And one very positive development also is that there's this little speck in the northern part of the Persian Gulf called Carg Island. And Carg Island is a area. It's an island in the Gulf, very north, that Iran used to use to kind of monitor a lot of the ships that were coming out of Kuwait and out of Iraq. Iraq has a little strip of land that actually is on the Gulf. And they would load up their oil tankers and send them down through there, and maybe even some, maybe there might even be an Iranian port up there also. That island has now been obliterated by our military forces, and I wouldn't be surprised to see us man that island and have some type of observatory control force on that island, just so that when the tankers start flowing again, and there's probably, look, the Persian Gulf is very big. There's probably a couple of hundred tankers up in the Persian Gulf that are loaded with oil, ready to go through the strait. And it's just not all going to happen in 2 or 3 days. So I think if we occupied that as an observation point for all of the traffic in the Gulf, once we
all kind of leave,
not that we would put troops, and I think that would be a one-off, certainly nothing to the extent of troops on the ground in the mainland of Iran.
Wow. Okay.
So watch for that. Watch for that development in the news.
Okay, so taking into that account, like at the end of the day, we're here to talk about the market and the effect of the market and the overall effect of the market, and what does the big picture look like? We obviously knew now, if we look in retrospect, of the United States' attempt at world domination by going into Venezuela. I mean, that was, you can analyze that, go conspiracy on all things barred, go conspiracy on that story or not. But basically, by us doing that, we really preserved ourselves a little bit of a cushion against whatever could have happened. Because just think about this. This story could have gone another way.
That Venezuelan oil is now flowing through us.
Correct. Exactly. And so that
Chevron is over there. Chevron is the only company that's never really left Venezuela. So I'm sure that we have put them pretty much in charge of the outgoing product.
Correct. And so, so that's one story. And when I say all this to say that this story could have gone another way. I mean, the fact is, think about it. The relationship between the U.S. and Israel, at times contentious. This president has been a big fan of Netanyahu, so we know that. But even though the world is not a particular fan of Netanyahu, the fact that they brought Israel in, look, you have to realize that not only does Iran want the decimation of everything American, but they want the decimation of everything Jewish and Israeli. And so that was that story. And then you've got the story of the nuclear proliferation by Iran and the fear by the United States that this could be in the works, and that that the deals that were made by the last administration left us really at risk. And it goes back to Greenland. It goes back. I mean, it's fascinating. I mean, there are going to be books written about this. They're probably going to be amazing.
Look, Hezbollah and Hamas and the Houthis in Yemen were all funded by Iran, most likely by this couple $1 billion that we
gave them back don't you remember we sent the boat over with some cash, didn't we?
That was
we
allegedly...
sent the plane with
the justification at the time was that it was always their money.
That's fine.
It's ridiculous.
Okay. Anyway, wild and crazy. But so where do we stand here right now? So in 2 weeks, oil went from $62, $65 after the attack, and we opened up on that Sunday. We know that the oil markets trade virtually 24/7, 23/7, 23/6. Okay, and we know that they popped up 6-7% the minute the futures market opened on that Sunday. The next morning we came in and the market was up another 8%. We ran from 65 to 70 to 80 to 90 to $119.20, and some people had called 130 tag. It was spectacular the way the predictions were really kind of close to what they were, and we knew that once you get up to those higher levels, that it is going to have major, irrespective of that risk on or risk off, whatever you want to call it, trade about oil in the U.S. markets, the fact that the inflationary impact of $119, even if it was for a moment, but an above $90 barrel of oil is going to have on the economy, on people's perception of what's happening, and surely on the market. So we had a little bit of a roller coaster where we got from 119.20 back down to 80 again, right? And that gave the market a little bit of a reprieve, right? Because the market had a little bit of a rally, but it was very short-lived because there was still a lot of fear and anxiety. The VIX have not let up until really today when we got a bit of a 5% pullback. Okay, but you've had these days where once the initial chatter of the war sort of died down, you were basically in a trade where the market went inversely wherever oil went. And I don't even know how the rest of the market's been trading because people are saying that that the market can't really forge its way. Look, we did hit Dow 50,000 for a second a few weeks ago. We did hit S&P 7,000 a few weeks ago. We did break through the 50 on the Dow. We did not really spend much time around those higher levels on the S&P, but we know that tech has been under a lot of pressure literally since November, right? And so that's been that's been problematic. And there are people who feel that unless the Mag 7 and tech is able to brush the dust off of their clothing, is this market going to be able to forge higher?
So one of the positive things that's been going on, but just about coincident with just about the time the war, if you want to call it a war, started, is that software has recovered quite a bit from the massive beatdown that it was taking through the February and March under the threat of AI, revolutionary AI products from different specialized AI providers, making software, a tremendous amount of software that's been out there and institutionalized for a long time, obsolete. Well, the really high quality software names, and I have to be careful about how I talk about individual stocks because I'm not a registered analyst, but the really quality software names, ServiceNow, Salesforce, a few others have recovered nicely off those lows.
We definitely edged in the lows in that sector.
Even on the days when the war was raging a little bit, those stocks have acted well, albeit the fact that they were down probably 50%. So definitely
it happened even without our permission. I mean, it happened quietly while the rest of the
institutional managers looking for bargains and saying to themselves, look, I get it. There's some AI stuff out there that's going to make software, that's going to make garden variety software a little bit more of a commodity. But these are companies that have real legitimate high-end products and services,
and they have
very large
to the
installed
CapEx
base.
AI and all that too, and data center.
So they've been looking at those names as value opportunities almost. And even other stocks in the tech world caught some value buying. And you've got tech is okay today. You've got a very big like an NVIDIA conference today with some developers.
I saw that.
So that's got a positive tone to the tech market. And again, look, oil is no higher than it was on Friday.
Where are we in the mid-90s here now?
Yeah, you know what? Brent crude is 101 and West Texas is 95.
Okay, so
West Texas is down $4. Brent crude's down $2. There's still
Do you think it's straight up the oil, the fact that oil is coming off its highs, that the market is roaring, or I think this is a relief rally?
I just think it's a little bit of a relief rally. But look, oil is mid-90s to 100. It's not 115 to 120.
Correct.
It hasn't spiked higher.
But it also has not settled in the 80s.
No, not
it's
yet.
Settling in
Not
the
yet.
mid-90s.
But none of these big oil tankers, and believe me, there are hundreds of oil tankers in the Persian Gulf that are loaded to the gills with oil right now, waiting to go through the Strait. Well, none of them have been hit by Iranian drones or missiles.
Correct.
And the threat is that if they tried to go through the Straits, they would be. And their insurance contract has been canceled, and the new entity that the U.S. Treasury is going to put together with an international consortium of money to insure them is not really in place yet.
Gotcha.
So we're in a little bit of a standstill on traffic through the Strait. But the good news is none of these ships that are just floating in the northern Persian Gulf have been hit either.
Sure.
So, you know, the war has not escalated. We continue to pound relentlessly Iranian targets, which may have warehouses of drones, may have warehouses of missiles. We don't really know for sure.
They do have incredible stockpiles of,
and I'm
of weaponry,
sure,
which is
and, you know, where on Friday the story was we had hit 5,000 targets. Now the story today is that we've hit 7,000 targets. So we continue to put just a massive beat down on their military infrastructure capabilities, and I think that's one reason that the market is a little bit better today, and it's just that, you know, we continue to make progress, and people feel that this is going to be 2 or 3 weeks, not 4 to 6 months, or even longer.
I love it. All right, so we've got a minute left. Anyway,
look, the Dow is just below 47,000. So we're 6% off
6,700.
The highs on the Dow. The S&P were maybe 4.5% off the highs of 67 of 7,000, which we scraped a couple times, never really closed above there. So, you know, a lot of people could say 3 months from now, look, we had a little bit of a correction in March. Nowhere near the correction we had when we had the big tariff tantrum last year.
20.8%.
So this was
exactly a year ago, virtually. Yeah, amazing.
So I think that the smart, seasoned institutional managers that have been doing this for a long time are looking at this as an opportunity to buy some stocks at good values. They're not going all in. They're not going hog wild, but they're not selling anymore. They're nibbling on the buy side.
Gotcha. I love it. You know what? We got to wrap this up. I find it resilient. I find it amazing. You know, if they really wanted to sell this market, they've had plenty of reasons to do it, and I don't think they're doing that. The selling has been thoughtful. The buying has also been thoughtful. You know, I'm not sure what retail is really doing in this market right now. They may be just taking the opportunity to trade
watching a little bit.
I think that's the case because they've not seen this story before. They were the ones that were smart money that bought the market in February, March, April last year because it made sense to them. They had seen that kind of volatility. This is a different thing. This is a story that's got
gradual drift lower.
And it's got some weird, you know, geopolitical and commodity infused madness going on. So I think they're probably sitting on the sidelines, maybe just trading a little. Maybe they're on spring break. But you know what? At the end of the day, this market is incredible. We've got to run. I love you. It's a pleasure to be here. This is the Einstein of Wall Street with Tim Anderson, just breaking it down. This is the Big Breakdown, episode 9875 of What the Heck's Going On. Now you know what the heck's going on. That's all I got to say about that.